But right now, to discuss more, I'd like to introduce an illustrious panel from Rosa and Rubini Associates, BCG, PayWith.Glass, and the chair of the Crypto and Digital Assets All-Party Parliamentary Group. Not forgetting Lord St. John of Bledsoe to moderate.
So welcome to the stage, everyone, and we can't wait to hear more.
Well, I must say I'm rather overwhelmed by the size of this incredible stadium here. Well, I was listening to Genesis concert just a few weeks ago in the London O2 Arena, but this is incredible. It's a great treat to be with you today. We have 35 minutes. It's rather like speed dating on one of the most important subjects being debated in the financial services sector. It's wonderful having a member of parliament next to me here. The House of Lords is a rather unique chamber where we say in parliament, in the House of Lords, in the House of Commons, you win the votes. In the House of Lords, you win the arguments. But today's subject on CBDCs is indeed one which is going to take center stage. When we look at what's been happening in China, China introduced the whole process of CBDCs in 2014, and it's taken 8 years for it now to be formally launched. In fact, it was launched at the same time as the Winter Olympic Games. But I have the good pleasure of moderating, and I just want to say a couple of words about the subject. As you know from your program, 89 countries around the world are now actively considering this development. The House of Lords Economic Affairs Committee produced a report, which I have here, Central Bank Digital Currencies, a Solution in Search of a Problem. I won't go through the report, but I would just say that one of the conclusions from this report is that the UK is not yet at a position where we feel there's a convincing case why the retail CBDC should be launched, but they've introduced a task force which is basically working on the whole process, learning lessons from other jurisdictions around the world as to what we need to advance this. It's not a matter of if, it's a matter of when. So just to go very much through the key subjects, we need to discuss the design, the implementation, the implications of financial systems, including policy, regulation, as well as oversight. But in going through the advantages, we also need to be very cognizant of the risks on breach of privacy, and obviously other risks of hacking. Now, over the last 15 years, it's quite extraordinary. My background, actually, apart from being in Parliament, is running data centers, which I've been doing since 1998. But in this incredible stage of digital transformation and technological developments, it was obvious that this innovation would soon hit the headlines in terms of central banks, because of course we've had this extraordinary surge of interest in cryptocurrencies, which another word is called virtual offerings. But in terms of where we go from here, the whole COVID crisis has highlighted the need for digital IDs. Of course, in talking about the developments towards a pervasive society, Web3 is about to be launched with decentralized promises, but we've still to learn lessons from Web 2. By designing money, digital currencies can reshape how we transact, but innovation and technology can both be a force for social good, and this will come into some of the questions I want to ask my distinguished panel, including financial inclusion, but also it can be a force for concern. And here again, I touch on the whole issue of privacies. So CBDCs need to be seen in the context of national payment systems. And as I said before, lessons have to be learned from other jurisdictions. There has been, for those of you who have an interest in learning about it. It's one thing, it will nod you off to sleep. It's like War and Peace. But one of the most excellent publications is the World Bank's Central Bank Digital Currency Report, which was launched in November last year. It is the most extensive piece of literature for any of you who want to learn everything about the subject. And of course, there have been a number of jurisdictions that have launched their CBDCs. We talk about Nigeria, we talk about the Bahamas, but they are simply in the implementation stage. They haven't been fully embraced. So improving payment systems, performance is the most important motivation, and payment safety. I've said about enough. One of the problems about getting parliamentarians is the derivation of parliament is parley, to talk. We do tend to talk too much. But I want to now pass over to Kunal. Kunal comes from the Boston Consulting Group, and he'll be giving a general overview, setting the scene, before I start drilling down into some of the more pertinent questions and answers. Kunal.
Thank you, Lord Anthony. And great to be here to introduce to you all Project New Era in the UK. The project itself is essentially about looking at the future of digital currency ecosystem and environment in the UK, primarily focused on retail CBDC. It's a two-part project, the first part of which concluded in Feb this year, with the publication of a very detailed green paper which looked at a lot of specifics about retail CBDCs. We looked at stablecoin systems as well, and looked at what the design principles and some of the risks, opportunities, etc., that need to be considered by the central bank, by the regulators, by the lawmakers, in order to create a well-informed retail CBDC environment in the UK. Now, that green paper was put together through an industry collaboration. We had a number of very, very well-informed organizations provide input on a regular basis. We also had companies like Pay with Glass around the infrastructure input, the Payments Association, bringing together the entire payments industry to provide that level of depth and granularity on the retail CBDC topic. Now, the recommendation of that paper was to create a public-private partnership to do and run a series of pilots on the infrastructure required for a retail CBDC. And in fact, that's the phase of work we are entering for Project New Era. Come September, we'll be launching a series of retail CBDC-led pilots. And the pilots will be essentially, we'll go through them in the course of the next few minutes, fulfill a number of very important use cases. There is a private industry consortium being formed. We have a number of very distinguished organizations on board already, including IBM, Finastra, Finclusive, Ibanera, the Payments Association itself, Materium, Accomplish, and there are more conversations happening. So it's going to become quite an interesting space to watch. Now, as I mentioned, we are focused on retail CBDCs, but we'll also be looking very closely at the stablecoin environment and how that supports the rollout of a future retail CBDC in the UK. Now, as Lord Anthony mentioned, roughly 85 to 90% of the central banks globally are looking at CBDCs extensively. There's a lot of research happening. There's a lot of proof of concepts. There are some pilots, and there are some real retail CBDCs launched in the market. So there is a great amount of momentum. Now, this is an important point for us to consider in the pilot itself. The pilot ultimately has three main objectives. The first is to build a technology infrastructure that is well suited to the needs of the market with regards to retail CBDC. The number of times we've seen over the last few years the lack of infrastructure delaying the work on retail CBDC by the central banks, we just don't want to be in that space. The second objective is going to be, importantly, we will be using and deploying use cases real-life use cases, testing in a controlled environment to actually inform the design principles, of which there are very many for us to clarify. In particular, the question on liability and bank disintermediation, cybersecurity, resilience, interoperability, and finally programmability to foster the innovation that can be provided by retail CBDCs. And then lastly, we'll be working very closely with the market, and particularly the central bank regulators and others, to provide them with the empirical output of these pilots for them to actually make well-informed and thorough decisions for the UK's retail CBDC environment. We expect the pilot to run for about 18 to 24 months, starting September. So this space will be pretty interesting to watch for. It'll be a complex, challenging journey, but one we're all very excited about, and we'll talk about it more over the next few minutes. I just want to end with a very short demo of the sorts of use cases that the retail CBDC pilot will look to address over the next few months.
The world around us is changing rapidly. While everything is moving faster than ever, money has stayed static. Transaction settlement times are slow because the current payments infrastructure is inefficient. Card payments travel through 4 different entities and take up to 3 days to settle. We can do better. Introducing D-Sterling, the future of money today. Imagine if payments could actually settle instantly for customers and merchants. Say goodbye to pending payments and high card fees. Where our technology enables new business models so you can pay as you go per article on the FT. What if you could tokenize the shares of any asset, like Chelsea Football Club, that fans could buy, sell, or use like money? Put conditions on payments, ensuring a transfer goes towards your brother's crowdsourced mortgage deposit and not anywhere else. When money only leaves your account when you receive your delivery. Young people are increasingly excluded from credit because they don't have a traditional financial history. Imagine if institutions could use your transactions instead of a credit score to determine eligibility. Lowering barriers for all parties creates a more inclusive and sustainable future that's better for you, businesses, and society alike. Let's build the future of money together with D-Sterling.
Well, thank you very much, Kunal. That's excellent. It's given us a good flavor of the subject. If I could pose to you the question with our report, Central Bank Digital Currency, a solution in search of a problem, how would you respond to that answer, to that question?
Well, the UK is very well known to be one of the leaders in the financial services industry. The infrastructure, the level of innovation, the level of forward-looking regulation is actually second to no other market and jurisdiction. We want to make sure that the decision we take around such an important evolution of money is well-informed, well thought through, and is elaborate enough to actually take into account any risks, concerns, challenges from the market, which is why we think running this pilot, because the potential of a retail CBDC is immense, right from digital financial inclusion to a massive amount of innovation through programmable payments. And not least, there is going to be a huge amount of requirement of interoperability, given there are many, many advanced, developed and developing economies moving to a CBDC world. So for us in the UK to have a market-led initiative that tries to answer that question, and also hopefully answer the question of what solutions will be put in place as a result of introducing a retail CBDC becomes important. And I think driving that public-private conversation to be able to get to an answer to that question, particularly led through an infrastructure point of view, we think is going to be the right approach.
Thank you. If I could move Lisa to my left. Lisa is a distinguished Scottish nationalist MP, actually the only party which is not represented in the House of Lords. Lisa's also a clinical psychologist. My question is both to you in a personal capacity and as a member of Parliament. Can you give us a sense of the societal challenges that CBDC and innovation can and should address?
Thank you, and thank you for that kind introduction. I do think my constituents probably believed that Westminster should have more psychologists, and that's how I found myself in this position. Yes, I mean, I think what we need to be doing, as has already been shown in the video that we watched, is we need to be ensuring that digital transformation and innovation has at its heart inclusion, because there are so many sectors of our society who are marginalized in traditional finance industry. I don't think this is going to be something that entirely replaces cash. I think it would be a complementary system. But what I would like to see is test cases where we can have inclusion of marginalized and minority groups at the centre of progress moving forward. And members of Parliament really are looking at test case utility. How will this improve our lives? How will this improve the lives of the ordinary person who lives in the UK and internationally today? And I think it's those test case utilities that we really want to see the benefits from. We're also going to be looking, of course, at any challenges that require to be overcome and to be taking things forward in a very proportionate way that embraces the opportunities for potential, for growth, for new job sectors, and collaboration internationally.
Thank you. We've seen a number of initiatives in developed countries, but just as many in developing countries towards the CBDC and digital currency environments. We've talked about Bahamas, we've talked about Nigeria, and we've talked in a larger context about China. What are the debates that we need to have in the UK, and how can we move this forward? And I'm talking here including the subject of financial inclusion.
Yes, absolutely. We're very, very interested in financial inclusion, as you mentioned, and the all-party parliamentary group for crypto and digital assets that I chair in the House of Commons is going to be doing something very unique moving forward, is that we're going to be having our first inquiry report, and we want to hear from as many people as possible, providing written and oral evidence, because we want to look at this sector, the opportunities that it gives for the UK and beyond for that collaboration internationally, to make sure that we focus upon jobs and growth and technological advancement with innovation hubs across the UK. We also want to be looking very specifically, and we will have a chapter on CBDC and looking at what is, I think, a very pivotal pilot study that we've heard about moving forward, and other aspects of that, to make sure that we have those key players involved in the inquiry, and we can have broad collaborative cross-party working on these vital issues in the UK moving forward, and that we can include you, and please do get in touch with me moving forward from today, and thank you to Money 2020 for celebrating the work that you're doing in industry. But at the UK parliamentary level, we're upskilling ourselves as MPs, members of the House of Lords, because we want to be part of this debate and really at the key hub of progress moving forward. So thank you, and do get in touch.
Thank you, Lisa. The world is facing a very uncertain future right now with the war in the Ukraine. Many economies are worried about stagflation, soaring inflation, and growth. Brunello, you and Professor Dr. Nouriel Roubini, he's one of the mentors in forecasting. In terms of your policy experience and macroeconomic commentary across the most challenging economies in the world, are you still bullish about CBDCs?
Thank you, Sir Anthony. For sure. I mean, CBDCs are a structural story. It's not a cyclical story. This is an evolution that, in our opinion, is inevitable. It will happen. As you said before, it's just a question of when and how, not if. In fact, I'm still surprised to see so many central bankers around the world being even skeptical about the need for CBDCs. We used to have letters written on paper with pen and posted and so on, and today everybody uses emails, of course. We used to have landlines. Today we do video calls. And in this respect, we have cash, and in the digital world, we will have CBDCs. It's as simple as that. Use cases will come. The platform will be provided by the technology that they are piloting in the UK and some other parts of the world. And then, when technology is available, that will help policy implementation. Let me do two examples. Fiscal policy, monetary policy. Fiscal policy. We need to provide stimulus sometimes. If we can provide targeted stimulus, it's so much better. And the programmability of payments that is enabled by CBDCs helps that, facilitate tremendously. Monetary policy. We all have faced the problems of having a lower bound, whether it's zero or effective. It's very hard to cut rates below zero. Why? Because you have cash that can be used as a substitute to avoid, say, the negative deposit rate. But once cash will be slowly phased out, I'm not saying immediately, but slowly phased out, then potentially central bankers can implement very negative interest rates. So the zero will not be a bound anymore. It will be just one of the many numbers out there. And the yield curve can be steep even when long-term rates are so low. That's the challenge that we have faced in the last few years.
Thank you. You mentioned it's not a matter of if, it's a matter of when. And we spoke earlier on about the time it's taken for China to develop itself into a mature CBD market. Where do you see geopolitical challenges, and how do you believe that developing countries will respond?
Yeah, so China has started, as you said, this project in 2014, and now it's coming to fruition. It's already available in everybody's digital wallets if they want to. Other countries have been much more slowly. Well, China started maybe to regain control on some of the key payments that were made in the country. They were going outside the circuits that were visible to the central banks, and they wanted to regain that kind of visibility. That was lost to, say, Alipay, WeChat Pay, and so on and so forth. But then they kind of realized that introducing a CBDC could help boosting the internationalization of the renminbi. And then, in a world in which you have reserve currencies, we know the traditional, if you want, ranking, where you have US dollar, you have the euro, and then sterling and Japanese yen. But in the digital world, at the moment, there's only one reserve currency available, and that's the Chinese EU1. So effectively, when boosting the internationalization of the renminbi, they can also invert or subvert, if you want, this kind of order and ranking. That's a powerful geopolitical tool that they can use to increase their influence around the world. The US was late, is catching up pretty fast. The UK was late. There are parts of the governments in which they are catching up fast. Others are still a bit behind, in my opinion. The EU is quite skeptical on a number of fronts, but I'm sure as soon as we realize that it's inevitable, they will catch up quite fast.
Thank you. If I could now move to the banker amongst our presence, Nicole. Nicole's been at Barclays Bank for the last 10 years, and she heads up digital policy with the bank. How do you, Nicole, think that CBDCs, do you think that Barclays CBDCs as an opportunity for commercial banks? Should they be supporting this initiative? And how can banks play a meaningful role in CBDC research?
Thank you. I think that's a really valuable question. I'm just going to quickly say something before I answer that. One of the statements earlier was a CBDC is a problem looking, or a solution looking for a problem. And I have to say, I'm not sure I sit in that vein because we've talked about financial inclusion, which is a problem. And a CBDC, for some, in some jurisdictions, it could be a solution. I'm not saying it's the only solution. When I think about the Bahamas, the reason that they looked at a CBDC was because there were so many different islands, it was impossible to have ATMs on them. They needed to find something so people could get cash or cash-like. So I understand the statement of a solution looking for a problem, but I'm not sure it's necessarily always true. So I'm a lawyer by trade. I don't do law anymore. No disrespect to lawyers. Great that that's your job. I very much enjoy policy. And I was told once about 2 a.m. whilst doing due diligence that there's no such thing as a challenge. It's always an opportunity. So when I'm asked about whether there are opportunities for the banking industry, there are. I work for a bank that's been around for more than 300 years. We have had to evolve. We have had to innovate. The industry has had to innovate. And when I say industry, I don't mean established firms. I mean payment companies. I mean fintechs. I mean large technology companies. The ecosystem will change. The landscape will change. And new roles will come to fruition. So I think it's really important that the industry at large works collaboratively with our regulators to make sure that when, because I also sit in the category of not if, but when, digital money becomes an enhancement to the financial service industry, that we have worked alongside to make sure that the design choices that are made mitigate the risks that will come up. And that whilst I work for a bank, I am a consumer. We are all consumers. So whatever comes at the end of the table, whether it's cash or cash-like, we want to make sure that it's protected properly and that it's something that is going to be a utility for all of us. So I definitely do see opportunities. We just have to make sure that we collectively work out what they are and get there in the safest possible way, in an efficient manner, mitigating the risks.
That's a very good answer. Thank you. We have a lot in common, Nicole and I, because I used to be an advisor to Silicon Valley Bank on their advisory board for 5 years, and the one bank which was kneeling for market share was Barclays Bank. So definitely the most innovative and progressive amongst the banks when it comes to the whole fintech being the central theme of the last couple of days. Could I press you on one issue? Much has been debated about the associated risks of CBDCs. Can you help us understand this better and share with your engagement with regulators what are the major risks?
So there are, as I said earlier, challenges, opportunities. There are lots of challenges and risks that come up, but they're ones that are cited across the industry. I never want someone to leave a panel saying, Barclays has sat and complained about all of these things. We have not. We as an industry have sat together with other industry participants and really importantly, our policymakers, and said, where are there risks across the industry? Now, one that doesn't get spoken about a lot is actually reputational risk. If something happens in a bank and something bad happens, it's terrible for a bank. It's unheard of for a central bank. If a central bank were to go down offering a CBDC and they haven't taken the time to test it and mitigate those risks, they would lose trust and confidence, which cannot happen. So that's one of the risks. Disintermediation, which is cited by our policymakers and industry alike, is obviously a key concern. The banks rely on credit creation, and if a large amount of deposits are taken out of commercial banks, that will be an issue. Now, there are mitigants that are discussed. I have to say, I slightly disagreed earlier with the view that the EU has been further behind. I actually think the EU has been really forward-leaning when it comes to CBDCs. They've turned around and said there could be holding limits. Potentially, there'll be 3,000 euros. Do I agree they should be 3,000 euros? That's a moot point. But a holding limit is a potential mitigant to a CBDC. Data privacy and anonymity, which are separate issues but get conflated. There are challenges that come up with that as well. Operational resilience. We spoke about financial inclusion. Financial inclusion is a real benefit for a CBDC, but we cannot forget those that will be financially excluded. And I don't just mean, often people say, oh, you're talking about the older generation. I'm not. My parents, actually probably more digital than I am, but that there will be some that don't want to move to the digital world. So I think it's really important that we're engaging collectively, whether it's for events like this, engagement forums, technology forums with, for instance, the Bank of England, the Market Advisory Group with the European Central Bank. There are lots of ways you can engage, but I haven't met anyone that said this isn't a collaborative effort that will need to be done across the board. So thank you for your question. There's a lot of reg engagement to happen and to keep happening.
Right. Thank you very much. Paul, you're the last, and you are the serial entrepreneur. You've been involved for 2 decades in the telco industry. You've created S&D Group. What capabilities? We spoke about the design and the implementation and the fact that this is an evolutionary rather than a revolutionary process. But what capabilities have you been able to transfer from your extensive experience into technology and infrastructure development for digital currency and the digital currency payments going forward?
So thanks, Lord Sijan. It's a great question. So the way we viewed CBDCs, especially retail CBDCs, is the same way that we viewed any sort of data challenge coming from the telecommunications industry. Digital currency is data. And in the telecommunications industry, we have the same challenges of resilience, reliability, we have the challenges of privacy, we have the challenges of mitigating several other risks as well. We have to look at scalability. And these are exactly the base challenges for the design of a retail central bank digital currency. So reports have been made already for the research that's done so far and the pilots that have started, where we're looking at a transaction throughput of at least 300,000 transactions per second before you could even think of starting to have a retail CBDC. And then you have to look at cybersecurity. What happens when you have a nation state that's decided that the new kind of war is going to be attacking the next country's economy by breaking their digital currency infrastructure? So to design a retail CBDC solution, first of all, we've taken it from the infrastructure standpoint, just as we would if we were designing a telecommunications network. We've taken all of the learnings we've gained over the years in the telecommunications industry, so data center design, telecommunications infrastructure design, and we've brought those to the table. And then we've married them with DLT, and we've married them with artificial intelligence. And there are many solutions out there that are heavily DLT-based and attempted to create a CBDC along those lines. I strongly do not believe that a DLT-only solution will work, at least today. Maybe in 10, 15, 20 years, but not today. I think that the solution needs to be a hybrid. And in our case, DLT is only 20% of the solution. We use the best parts of it. But then we also use artificial intelligence to handle a lot of things like cybersecurity and so forth. And this has come from the telecommunications world.
Thank you. So I'm pleased you talked about data challenges, because this really is the nub of the issue when it comes to privacy. These are the concerns that many of the consumers have been talking about. What are the trade-offs between data privacy and compliance? I'm saying this in the context that the long-standing challenges of the industry is going to be creating a balance. How can CBDCs manage this delicate balance?
Again, I think it comes down to the design of the solution via an infrastructure approach. And if the infrastructure approach is taken in the same way that you would for a telecommunications network, where you have high-value data and high-value traffic, and you make sure that any access to data is done in a manner that is exceptionally logged, it is exceptionally visible to those who are monitoring the network, then it makes it more difficult for someone to abuse the access to the data. At the same time, there needs to be a compliance framework built in. And our infrastructure solution is built as an open architecture, where we focus on transaction processing, we focus on the tokenization process, we focus on throughput, we focus on cybersecurity and resilience, but then we have best-in-class partners, and hence the industry collaborative effort, who are RegTech experts. We have partners who are able to integrate backward compatibility for interoperability with legacy systems. We have partners who are able to integrate other solutions like digital identity and so forth. And the idea is that this combined effort, not just from the consortium in terms of the companies, but the consortium in terms of the technology, this actually means we can build collaboratively a solution that can meet the requirements for retail CBDC in a large market. And that's really the key objective here. So we need the privacy, and we're working on making sure that privacy is maintained for every single user, but at the same time, compliance is maintained. And it's a delicate balance, but it is possible to do it. And we've been working very closely with these partners and experts to make sure that happens.
So my questions that I had to ask the panel are over, and we actually have 5 minutes left. What I would have liked is to reach out to our audience out here to ask a question to our distinguished panelists here. I don't know if anyone's got a question you'd like to throw to us. We have literally 5 minutes to answer this question. Otherwise, I'm going to pose a question. Anyone know I've got a question, a pressing question they'd like to ask? All right, so my question really is getting down to the whole cryptocurrency. Now, we're in a world at the moment where cryptocurrencies were seen in many environments as being a Ponzi scheme. Many of them didn't have any trust, and there's been a lack of education by the regulators. I have a confession to make. I bought 2 Bitcoin. I had the opportunity to buy Bitcoin at $1,000, $2,000, and I ended up buying it at $35,000. Because I think that the whole future of blockchain is going to revolutionize the way we do business. I'd like to put it to you in terms of where we stand with stablecoin, cryptocurrencies, the whole evolution of the process. When and if do you think that CBDCs will be fully embraced in the UK?
Well, I think if you look at the Bank of England statement itself, and we don't have 5 minutes, so I'll be very quick. They're saying it's the second half of this decade around CBDC implementation. And I think that's the right approach. We need to be very, very thoughtful, thorough, structured in the way we roll out a retail CBDC, because it's a significant shift towards the future of money. And I do think current forms of money, fiat, cash, other forms of digital currency, they will all coexist. And that's the thing we need to solve for. To say, how does retail CBDC interoperate, coexist with existing infrastructures, with existing forms of money, to make sure the objectives that we've outlined on this panel get fulfilled?
Thank you. Anyone else on the panel like to?
Yeah, I mean, I was just going to quickly add to that those are exactly the issues that the inquiry report that the all-party parliamentary group will be addressing. We need to look at how this will work in a combined way moving forward. I think, this has already happened. So we're upscaling MPs, we're upscaling peers to look at this new emerging sector, because we can't put it back in the box. People are already using it. My constituents are actually further ahead than I am. Yep. So part of it is educating ourselves in the Parliament, working with the sector and bringing it together in an inquiry report with recommendations to government going forward.
That's exactly what the task force is all about. Do you want to have a final point?
Maybe, so cryptos will find somehow their value at some point, fair value, the way we see in financial markets. At the moment, the best valuation I think you can have for cryptos is akin to art. As long as somebody believes there's a value in it, there's a value in it, okay? But stable coins and CBDCs will become, for sure, a reality. Some of it is already a reality. Stable coins, I believe, exist in nature. We just don't realize they do. Think about the points that you get when you fly with your company, the Avios points of British Airways and so on, with which you can pay something. And in this case, it's mostly miles or maybe some hotel room. But if regulation allows to pay more things, maybe your groceries at some point, with these points, you have a stable coin in action. So that's where the regulator really needs to understand that some things are already happening, pushed by the private sector, and therefore it's so much better if the public sector gets up to speed and puts a consistent framework around those digital aspects.
Yeah, there needs to be joined up thinking. Nicole, just final question.
I just think it's really important to think about cryptocurrencies such as Bitcoin, stable coins, and CBDCs very, very separately. If I wanted to go into the supermarket and buy some milk, I'm actually lactose intolerant, so I wouldn't buy milk, but if I did, it'd be £1. And it'd be £1 today, £1 tomorrow, £1 in a week, £1 in a month. That's not the case with certain cryptos. It could be £1, it could be 10p, it could be £50. That's not a currency. You want a currency to be stable. So if I had one takeaway from this, it's remember, a CBDC is meant to be cash-like, and it will be linked to a central bank. A cryptocurrency is not linked to a central bank. And a stable coin, it really depends. And some are stable, some are coins, some are not. But you have to think about them very, very differently, and they have to be regulated appropriately differently.
Paul, do you have a final comment?
All right, so we're completely out of time, but I'll make this very quick. So I believe that CBDCs, stablecoins, and crypto should coexist and will coexist in the future if the implementations are done correctly. The design of the infrastructure we've started with so far, which people now fully test in the pilot, will allow that and can allow that. It's really up to the regulators. But the idea is that we approach this from an infrastructure standpoint so that regulation is through the infrastructure, it's not through the currency itself. It means that you can now have that coexistence. You now have the tools available to regulators. You have the tools available to central banks. You have the tools available to everyone to make policy decisions. And we can actually have everything working for the mainstream market on one core infrastructure. And I think that's the best approach.
Thank you very much. I think our time is up.
It is.
Thank you for your indulgence. Thanks very much.
All right, folks. Thanks a bunch. Thank you.